Welcome back to the channel. Today we're diving into the 7 habits of highly successful private investors. You know, the ones who seem to have cracked the code to building wealth. These aren't your get-rich-quick schemes. These are the fundamental principles that can help you achieve financial freedom and live life on your own terms. Let's get started. The first habit of highly successful private investors is their remarkable ability to think long-term. They possess what we call a future time perspective. Now, this doesn't mean they have a crystal ball or anything. It simply means they prioritize long-term gains over short-term gratification. Think about it. Most people get excited about making a quick buck, right? They chase the latest trends, jump into volatile markets, and often end up losing more than they gain. Successful investors, on the other hand, are playing the long game. They understand that real wealth is built over time, through consistent investing and disciplined decision-making. They're not swayed by market hype or short-term fluctuations. They see the bigger picture. They're thinking years, even decades ahead. And because of this long-term mindset, they're more likely to ride out market downturns and come out on top. This long-term perspective allows them to make calculated decisions. They're not afraid to hold on to investments for years, even if it means weathering some storms along the way, because they know that time is their greatest ally. So how can you cultivate this future time perspective? Start by defining your financial goals. What do you want to achieve with your investments? A comfortable retirement? Early financial freedom? Write down your goals and establish a clear timeline. Once you have a clear vision of your financial future, it becomes much easier to make investment decisions that align with that vision. You'll be less likely to get sidetracked by short-term temptations and more likely to stay focused on the bigger picture. Remember, investing is a marathon, not a sprint, and those who can maintain a future time perspective are the ones who ultimately cross the finish line. Let's face it, financial freedom is a lot easier to achieve when you have fewer financial obligations. And that's the second habit we often see in highly successful private investors. They tend to have fewer responsibilities or dependents, at least in their early investing years. Now, I'm not saying you need to ditch your family and become a hermit to be a successful investor, but it's undeniable that having fewer financial responsibilities can free up more capital to invest. Think about it. When you're not bogged down by mortgage payments, car loans, or the costs of raising a family, you have a lot more flexibility with your money. This isn't about being selfish, it's about recognizing the financial realities. Many successful investors prioritize their financial independence early on, often before taking on major life commitments. They pour their energy and resources into building a solid financial foundation, which can then provide greater stability and security when they do choose to take on more responsibilities later in life. This doesn't mean you can't achieve financial success if you have a family or other commitments. It just means you might need to be even more strategic and disciplined with your finances. The key takeaway here is to be mindful of your financial obligations and how they impact your ability to invest. If you're just starting out and have the option to live a more frugal lifestyle and save aggressively, it can significantly accelerate your path to financial freedom. This one might surprise you, but the third habit of highly successful private investors is that they're often not tied to a traditional career path. Now, this doesn't mean they're all sitting on a beach somewhere sipping margaritas all day, but they're not necessarily climbing the corporate ladder either. Many successful investors have chosen alternative paths, ones that provide them with more time and flexibility to focus on their investments. Some are entrepreneurs building their own businesses, others are freelancers or consultants setting their own hours and choosing projects that align with their interests. The key here is that they're not relying on a traditional job as their sole source of income. This gives them the freedom to dedicate more time and energy to their investments, which can be a significant advantage in the world of private investing. Think about it. If you're working a demanding 9 to 5, it's tough to find the time and mental energy to research investment opportunities, analyze market trends, and manage your portfolio effectively. But if you have more control over your schedule and income, you can really immerse yourself in the world of investing. Now, I understand that not everyone can just quit their job and become an entrepreneur overnight, but there are ways to create more flexibility in your life, even within a traditional job. Maybe you can negotiate for more flexible hours, or explore remote work options. Or perhaps you can start a side hustle that can eventually provide you with more financial freedom. The point is, being successful in private investing often requires a significant time commitment, and those who have the flexibility to dedicate more time to it often have a distinct advantage. Now let's talk about mindset. The fourth habit of highly successful private investors is that they invest for freedom, not consumption. What does this mean? It means they prioritize financial independence over a flashy lifestyle. You won't see these investors blowing their money on fancy cars, designer clothes, or extravagant vacations. They understand that true wealth isn't about showing off. It's about having the freedom to live life on your own terms. They're content living below their means, driving older cars, and finding joy in simpler pleasures. Why? Because they'd rather invest their money in assets that will generate long-term wealth than depreciating liabilities that drain their bank accounts. This mindset shift is crucial. It's about delaying gratification and understanding that the sacrifices you make today can lead to a more secure and fulfilling future. It's about building wealth, not just spending it. So, how can you cultivate this invest for freedom mindset? Start by examining your spending habits. Are you spending money on things you truly value, or are you trying to keep up with the Joneses? Identify areas where you can cut back on unnecessary expenses and redirect that money towards your investments. Remember, every dollar you save and invest is a dollar working for you, building your financial freedom. And that's a far more rewarding feeling than any fleeting purchase can provide. The fifth habit of highly successful private investors is their aversion to debt, especially when it comes to investing. They understand that leverage, while potentially amplifying gains, can also magnify losses, and they're not willing to gamble with borrowed money. These investors are incredibly risk-averse when it comes to using debt to finance their investments. They prefer to invest with money they can afford to lose, knowing that market volatility can lead to unexpected downturns. This conservative approach might seem less exciting than, say, day trading on margin or diving into highly leveraged real estate deals, but it's this very cautiousness that protects their capital and allows them to weather market storms. Remember, every investment carries some level of risk. But when you borrow to invest, you're essentially multiplying that risk. If the investment goes south, you're not only losing your own money, but also the money you borrowed, potentially putting yourself in a difficult financial situation. So what's the takeaway here? If you're just starting out, it's generally best to avoid borrowing to invest. Focus on building a solid financial foundation by saving diligently and investing in a diversified portfolio of assets you understand. As you gain experience and knowledge, you can explore more advanced investing strategies. But always remember that leverage is a powerful tool that should be used with extreme caution and only when you fully understand the risks involved. Now, this next habit might sound a bit unconventional, but it's something I've observed time and time again among successful private investors. They're often not team players. They're independent thinkers who are comfortable going against the grain and making decisions that others might question. This isn't to say they're arrogant or dismissive of others' opinions, it's just that they've developed a strong sense of conviction in their own research and analysis. They're not afraid to trust their gut and make investment decisions that align with their own unique perspective. This independent streak often stems from their deep understanding of their own risk tolerance, financial goals, and investment philosophy. They've spent countless hours researching, analyzing, and refining their approach, and they're confident in their ability to make sound judgments. Being a successful private investor often requires you to be comfortable with uncertainty and to make decisions that others might not understand. It's about having the conviction to stick to your strategy, even when the market seems to be telling you otherwise. So, if you find yourself questioning conventional wisdom or challenging the status quo, don't be afraid to trust your instincts. Do your own research, develop your own investment philosophy, and don't be afraid to be a bit of a lone wolf in the world of finance. The final and perhaps most important habit of highly successful private investors is that they genuinely enjoy the process of investing. It's not a chore or a burden for them, it's a passion, a hobby. a constant source of learning and growth. These investors are endlessly curious about the markets, the economy, and the world around them. They devour financial news, pore over company reports, and constantly seek out new information and insights. They find joy in uncovering hidden investment opportunities, analyzing market trends, and watching their portfolio grow over time. The process of investing itself is inherently rewarding for them, regardless of the outcome. This passion is what fuels their dedication, their discipline, and their long-term success. They're not in it for the quick buck or the bragging rights. They're in it for the intellectual stimulation, the challenge, and the satisfaction that comes from making smart financial decisions. So, if you want to achieve lasting success as a private investor, it's essential to cultivate a genuine interest in the process. Explore different investment strategies, learn about different asset classes, and find what resonates with you. Remember, investing is a lifelong journey, and the more you enjoy the ride, the more likely you are to reach your destination. And there you have it, the 7 habits of highly successful private investors. Remember, these habits aren't about shortcuts or guarantees. They're about building a solid foundation for long-term financial success. Incorporate these habits into your own investing strategy, and you could be well on your way to financial freedom. Don't forget to like, subscribe, and hit the notification bell for more insights and tips. Thanks for watching.